Hey, what's going on? What's going on? Welcome. So if you're catching this on the replay, make sure you hashtag replay so that I know that you were here. And if you are catching the replay, you can skip ahead to about the 1.5 to 2 minute mark to get to the content. When you jump on, let me know who you are and where you're from so I can shout you out and say hello after the broadcast. And while my live viewers are jumping on, I'm going to be sharing this out to a few of my favorite spots, and I encourage you to do the same. All right, so let's hope that a Facebook app is doing me a solid this morning. We hope so. Woohoo! Awesome sauce. This is great. We are getting there. It's awesome. Okay, we're good for a moment. Hey, I was good for a minute. Let's see. I need, here we go. Now we're cooking. I'm actually sharing this out to a few more spots than usual because it is just one of those kinds of topics. And so I will just deal with that. All right, cool. We are right at just past the 1.5 minute mark. Okay. So let's get down with all of these dates and deadlines, everybody. All right. The IRS is still set to open on January 28th. But, like I said, this shutdown is still an ongoing situation, and still we'll just tell people to put your patience on because there's going to be a reduced staff. There are people that are really hurting out there trying to get to work and all of that stuff. So even though the IRS is expected to open, still put your patience on and expect delays. January 31st is the deadline for filing your 2017 taxes if you live in areas impacted by Hurricane Florence. Okay. If you had a valid extension already filed, if you owe and you didn't have a valid extension already, you definitely need to reach out to the IRS as best as possible. If you live in areas impacted by Hurricane Michael, you have until February 28th to file your 2017 taxes again if you had a valid extension already filed. February 15th is the release date for tax refunds that contain the Earned Income Tax Credit and the Child Tax Credit. And then we have March 15th is the deadline for S-Corps and partnerships. If you need to either file your taxes or file an extension by March 15th. Otherwise, the failure to file penalty for S-Corps is $195 per month. And for partnerships is $200 per month. And then we have April 15th, which is tax day, okay? And it's also the deadline for your Q1 estimated tax payments. So I encourage you to file early just in case you got to write checks to the federal and the state governments for estimated taxes. Whew! Okay. So I do believe, I'm looking at my list here, I think I got all the dates. After tax day, the dates kind of get few and far between, but yeah, there's a whole bunch of dates going on the first quarter. All right. So enough of that. Let me do the intro and then we'll get down with the content for today. Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today I want to talk about the states a little bit. When I come on here and I talk taxes, we're talking about generally federal taxes, okay? Because that is what is applicable nationwide. We have 50 different states and 50 different sets of rules when it comes down to taxes. So that's why I wanted to just take a moment today to talk about, states conforming to the Tax Cuts and Jobs Act, because not all states actually have completely conformed. So this year is going to be a little interesting because there are states that accepted some things and states that didn't. And your tax professional is going to need to know what states did what. So the last I have, and I have a list of them here. So, Maine and South Carolina have conformed their tax law, and let's see, neither of them excluded the elimination of the moving expenses. So for 2018, Maine and South Carolina said, moving expenses are gone. All right. Let's see. Let's see what else is on here. Now, Maine did not adopt the $10,000 federal limitation on the deduction of state and local taxes. And it also created a personal exemption deduction to replace the ones that was lost in the Tax Cuts and Jobs Act. And it is also denying the moving expenses. Now, for the moving expenses, 12 states currently permit moving expenses as a tax deduction. That's Arizona, Arkansas, California, Hawaii, Iowa only for 2018. For 2019, moving expenses are no longer tax deductible in Iowa. Kentucky, Massachusetts, Minnesota, New Jersey, New York, Pennsylvania, and Virginia. So if you are an employee and you incurred moving expenses for your job, then they're still tax deductible for you in those particular states. Now, so what this means is that you have to know if your state adopted a personal exemption or did they not, or did they conform? Are there other parts of the Tax Cuts and Jobs Act that your state did not adopt, or they tweaked it a little bit or something? So like I said, this is going to be something where your tax professional may actually have to take time, and it's not just we go and, do everything on the federal and it applies to the state correctly. It may not be that simple. So your tax professional is going to have to look at both your federal return and your state return to make sure that you have the proper deductions based on the new tax law and what laws the state did not change. Because normally what states do is you file your federal taxes, and whatever you filed on your federal taxes, that's what translates to the state taxes. But that's just not the case right now. So a lot of states, because it was done so quickly, states, number one, did not necessarily have time. And number two, some of the stuff the states just didn't agree with. Right? So they said, okay, no, we're not doing that. And this is what we're going to do. So you have to understand that, even though there's a blanket federal law, the state tax laws can vary from state to state. You have states that don't even have an income tax. So, whatever happens at the federal, that's what it is. And there's nothing going on with the state. There are some states that did not exactly accept the tax cut for corporations. So where it might be a 21%, it might be a 21% tax rate at the federal level. Each state may have a different tax rate for corporations and may not have necessarily taken that big old chunk of a tax cut, right? So that's the nuts and bolts of it. This is really going to be a short one, but that's what it is. So you have to know what your state decided to do with tax reform. And as tax professionals, you got to go through the state and make sure the state properly reflects the deductions that the taxpayer has. And taxpayers, you're going to have to do a little bit of homework yourself to make sure that you understand what your deductions are as well. There are a lot of people that have already filed their taxes, and there are, the final regulation for some of the Tax Cuts and Jobs Act just came out on Friday. So, there's still, I told y'all they were still writing the language, right? And so hopefully it won't be too much of a disruption. Again, put your patience on, you guys, because it's going to be a bumpy season for everyone. Okay. That's just the nuts and bolts of it. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day. I'll see you next time. Bye.